Welcome to you both, guys. Angelo, we'll start with you. You downgraded the stock and also said that you thought that this offer would actually be attractive at this price to Twitter, given where you think it would ultimately be worth. But just as we were talking, given the fact that it has traded significantly higher on its own in the past, does not filter into this decision as to whether to accept?
No, it does to an extent. I think, the world, 9-12 months ago is totally different than the world today. So I don't know if you can kind of necessarily put that in your analysis. When you kind of look at how much valuations have crashed within the industry here just in the last 6 to 9 months, I'm just hard pressed to think that, anyone out there would kind of value Twitter closer to that, that 12-month high in that $70-$75 range. So in our view, we do think a $55, somewhere along the lines of $55, which was our 12-month target price, is a reasonable offer out there for investors. In fact, it should actually be very enticing for a lot of investors out there.
And Jason, you've tried to frame the valuation question of Twitter relative to Snap as a standalone basis. And where do you think that takes you?
Yeah, I mean, we had a $60 price target. If you think that that Twitter should trade at something like a 20 to a 30% discount to Snap, because Snap is simply executing better, that would put you at 48 to 54. And 54 is the offer price, right, at 20% discount. So we think that, again, in this current environment, he really did not need to offer more than that. And I think Mr. Musk, has really brought up the idea of, for Twitter to be its best as a platform, maybe it shouldn't be as dependent on advertising. And so if you're talking about kind of ultimately a business pivot to maximize the value for a company that has struggled to gain share of digital advertising over the last 4 years, I mean, 2 out of the last 4 they have gained share and 2 out of the last 4 they haven't. We think that he doesn't, in this environment, he does not have to offer more than that.
Jason, I mean, operationally, have you gamed out? Has he given you enough clues as to what he would do to the business model that might theoretically shrink that spread between Twitter and Snap?
Look, and again, I think I talked about this on the show last week. I think we need to understand why users aren't growing faster. Is it because the product changes didn't work, or that the product changes worked, brought on new users, and it was offset by users who abandoned the platform because they didn't like the rules around content? So I think that, the first thing he would do, he would widen the content rules and not be so arbitrary about what content is allowed or not allowed on Twitter. I think over time, it's logical, like if you could come up with community tools where the community could vote on what is appropriate and not appropriate, but again, not the easiest to do, but something that's been discussed. But ultimately, I think you just have to address, let Twitter be the open platform that it's supposed to be, not edited. And then ultimately you figure out, what advertisers want to be connected with that platform. And then otherwise, how does it need to be supported with a minor subscription fee?
Shepard Smith here. Thanks for watching CNBC on YouTube.